Senators Hillary Clinton and Barack Obama no doubt worrying who's going to win the tight race in Nevada today. But should they be more worried about this? A new survey shows that the biggest economic fear on Wall Street, a Democrat in the White House. It even tops worries over a recession or a terrorist attack. Well, is this one of the reasons stocks are so shaky right now? Hello, everyone. I'm Terry Keenan. Welcome to Cashing In. Let's get the stock smarts. Our Cashing In crew this week: Wayne Rogers, looking very dapper there, Jonathan Honig, Dagan McDowell, and Jonas Max Ferris, along with Peter Schiff, president of Euro Pacific Capital and author of Crash Proof, along with Gary Kaltbaum of Kaltbaum and Associates. Welcome, everybody. Well, financial advisors in that survey worried about a Democrat moving into the White House. Are they right? Gary K., you say you bet they are.
Look, there's a myriad of reasons why the market's in trouble, but definite component is the Democrats possibly getting the White House. Look, the market is a forecaster of the future, and right now is for the chalk is Democrats to have both houses and the House, and all they're talking about is how business is bad, how they want to raise taxes, how they want to grow government and take it out of the economy, and that is a death knell for the economy as well as stock markets going forward.
Peter, there's a whole host of problems here, but is this one of them?
Well, sure. I mean, I'm a financial advisor myself, and I certainly worry about what the Democrats might do when they have both the House and the presidency. I'm worried about higher taxes and more government spending, particularly taxes that undermine entrepreneurship. But the market has a lot to worry about. The market's going a lot lower for fundamental reasons. It would go lower even if Republicans were to retain the White House, which I doubt.
Peter, I don't buy that for a minute, that people are worried about a Dem being in the White House, because otherwise, how do you explain Hillary Clinton being the #1 fundraiser from industries like commercial banking, securities and investment, and real estate? It doesn't make any sense. People would not be betting on her or Barack Obama if they were freaked out about what was going to happen if one of them won.
Jonathan, the hedge funds are huge donors to the Clinton campaign. She might not raise the capital gains taxes.
Not this one, Terry.
No, really? Oh, gee, that surprises me.
Yeah, but what worries me about the Democrats is that if you listen to them, their message is so explicitly socialist. I mean, at every opportunity, they seem to have this contempt for capitalism, this relentless pursuit of collectivism, and this total distrust for free markets. And again, if you listen to the platform, put all the politics aside, their goal is a national health care program. Their goal is environmentalism. They see, as Kaltbaum said, bigger government in every element of public life, and that's never been good for America, and that's never been good for the market either.
Yeah, and isn't the timing really bad, Wayne, given what's going on?
Well, you know, you can't blame the Democrats. Listen, the Republicans have been just as bad. I mean, you talk about, Jonathan's talking about this thing. Listen, the Republicans under Bush have gotten bigger government, big deficit.
Yes, of course, but at least he gave it lip service, Wayne. At least he gave it lip service.
Let Wayne finish.
Please,
come on.
Jonathan,
all right, finish.
A break here, huh?
Let him go.
Okay. I'm saying during the Clinton administration, during Bill Clinton's administration, the stock market went up. He was a Democrat. You think that this is all just Democrats? No, the Republicans are just as bad. They're doing just the same things.
Yeah, but
They've expanded the government in all areas, and it's terrible.
Okay, let's get Jonas in here.
Yeah, I don't think Bush's speech Friday was a model of small government and limited government hand in fixing the economy. I will say, I'm a registered investment advisor. Let me just say this. If your investment advisor right now in 2008 is more worried about a Democrat getting in the White House than a recession, you got to find a new investment advisor. That is ridiculous, because that is the big threat right now in the market. How bad is it going to get for the consumer? Not who's going to be in the White House. That is an issue. But like some other guys said, historically, the market has done okay with Democrats. I don't really know why, because the policies aren't always for corporate America, but that's the way it's been
historically. And maybe some sort of lag effect. I don't know. But Gary K., I mean, Jonas does have a point. Shouldn't you be more worried about a recession than what's going to happen in November?
Oh, I'm worried about everything we're seeing. I think we have an inept Fed. We have an administration that's very slow to do anything. But I want to get to the point here. Look, I don't give Republicans a pass, but at least they are for lower taxes. And just to make a list of proposals out of these Democrats, not the whole Democrat, but these Democrats, take rates from 35% up to 44%, buy capital gains, dividend, estate. They want to just remove everything that has been done from the 80s to now. now and go back to 70s tax policy, and you know what happened in the 70s.
Yeah, couldn't that prolong this, what might be a recession, into something, you know, even longer?
Well, that's already going to happen. Remember, the reason we had a good stock market, and I put that in quotes, during Clinton years, is because Alan Greenspan blew up a stock market bubble. And when that bubble burst, when Bush came in, he blew up a bigger bubble in the real estate market to try to postpone the pain. Well, now we're going to deal with that pain in spades. And so this recession is probably going to expand the entire next administration. It's not going to be over quickly. And that's why it's going to be
what you're saying, so you wouldn't want to be president. It's a bad time to be elected.
Well, I think whichever party gets in office is not going to be reelected, that's for sure.
Well, no, but what you're saying is it doesn't matter who wins the White House, so people can't be worried about the Democrats specifically because it's going to be bad no matter who wins.
Well, that's my point. It already is going to be bad, but unfortunately this recession is the price we have to pay for years of excess, for years of extravagance, of borrowing money from the rest of the world to consume instead of investing in...
But you know, Peter, don't you think that the right philosophy can at least dampen the effects of a recession?
Well,
and do you think that a real explicitly socialist philosophy is what's going to create wealth in this country
the real
15 years from now?
The real problem is, unfortunately, the Republicans have embraced the free market philosophy in rhetoric, but they don't practice it. And I'm afraid the Democrats are going to be able to blame this huge economic collapse on freedom and capitalism when it's socialism, when it's this fiat money, when it's Alan Greenspan's Federal Reserve that created this problem, not a failure of capitalism.
Yeah, Wayne, could this all backfire on the Republicans? I mean, Bush is going to get the blame for the first recession that he inherited and for this one.
Well, I think Peter's absolutely right. The Republicans have talked about it in rhetoric, but they haven't done anything. The Congress is essentially constipated in that sense. They don't do. They talk about, you know, we're going to have a good tax policy. We're going to save money. We're going to have a balanced budget. They haven't done one of those things. They have spent more. They have a huger government than when they went in. It's been a disaster. So the Republicans are going to get blamed.
You want to see investors and business people get behind somebody? You watch for Mike Bloomberg to throw his hat in the ring. Jack Bogle has been trying to push him into it for months now.
But you're all acting like the public doesn't like big government spending programs in a recession. That's the one time almost everybody tolerates what's essentially big government socialized programs, which is to buy us out of a recession. And that's what we've been doing since the Great Depression.
But it doesn't work.
There's a difference.
It limits the upside. It actually helps on the way down. In fact, when we didn't do it, we had much bigger recessions than we used to have in the last 10, 20, 30 years.
But look how we're even dealing. Look how we're even dealing with the recession that's supposedly coming. We're doing it by income redistribution, right? We're taking money from the rich. We're giving it to the poor.
We're doing it by inflation. We're printing money.
A recession?
No, we're printing money. We're either borrowing money from the Chinese or the Saudis, or we're printing it.
We're printing it and handing it.
And we're debasing our dollar. And it doesn't help if you get a tax cut and you have more dollars, but now your dollar is less valuable.
And everybody of every political stripe is jumping on board minute by minute on that idea, too.
Okay, a eureka moment for Jonathan, someone else talking about the dollar. We're going to have a lot more on this. President Bush and just about all the presidential candidates are now calling for a big stimulus package to get our economy back on track. Someone here says forget all of them and do one simple proven thing. Hear what that is when we come back. We'll cut everyone's taxes right now and do it for good to jumpstart our economy. That's the cure Jonas is recommending. And Jonas, it's a cure that's totally opposite of what we're getting out of Congress and the White House right now, because you would like permanent tax relief.
I like what I call intermediate term relief, which is like a payroll tax cut for maybe 6 months to a year. The reason why is there's a lot of consumers who got overextended. They can't pay their credit cards, they can't pay their home loans, they can't pay their car loans.
But a lot of those people don't pay much in taxes to begin with.
No, but everyone pays payroll taxes as a job. It's one of the taxes that really hits everybody. And if you come in there and say, well, the first $20,000 of income for everybody, so
that's really going to help our Social Security system.
Well, no, it's not great for Social Security long haul, but we got a short-term fix we need here with the economy weakening. And a one-time check is only going to lead to one-time spending. You need people's behavior to feel like
isn't it that short-term mentality? I mean, Terry, there's so much uncertainty in the tax code as it is. I mean, what are you supposed to, like, die in 2010 and retire in 2015? I mean, no one knows what it's going to be year to year. I don't think we need a change or a cut. We need to burn this thing to the ground and basically start over. The first step should be eliminating this whole notion that the rich should pay more simply because they have more. That's a Marxist idea that should that
Yeah,
should
well,
go
I don't
away.
hear any candidates saying that, except perhaps Ron Paul. Wayne, what do you think of this new stimulus plan, where each household will get some number, hundreds of dollars to go spend?
I disagree with both. I think all you need to do is leave the Bush cuts in place. They were an enormous stimulus to the economy. They've done everything right with those taxes. Already, you've got 65% of the people in the United States pay 1% of the tax. The top end of the people of the people earning money in the United States pay most of the taxes, almost 90% of the taxes. So you can't keep, quote unquote, taxing the rich. What we need to do is cut the spending. That's the problem. It's not a tax situation. It's cutting the spending. Leave the Bush tax cuts in place. They've done a wonderful thing for the economy. But don't talk about changing.
And Wayne, you're right that it looks like that these tax rebates are a done deal, that it's going to happen. But a lot of people would like to see the Bush tax cuts made permanent on the backs of that. Now, the White House backed off that idea to get this through Congress, but that ultimately, people point back to 2001 and those rebates, and maybe that's why those rebate checks worked, because you had tax cuts that followed.
But that was a different economy and a different time. Peter, do you think these rebates are a good idea?
Oh, not at all. They're just a gimmick. I mean, nobody would like to see more taxes than me. I mean, particularly my own taxes. But, if the government cuts taxes but simply prints the difference, they're not doing us any favors. They're simply substituting the inflation tax for the income tax. The last thing we need right now is stimulus. Americans don't need to spend more money. That's how we got into this mess in the first place. We spent money we didn't have. We borrowed to do it. We need to be saving. If that brings on a recession, so be it.
Jonas, why not just give the money directly to Walmart? Why bother the middleman?
Everybody can't just shift to being frugal all at once. That's the biggest danger. We're not even in a recession yet, technically. And if consumers start to worry and start to think they have to ease back, if their jobs are insecure, that's what causes a recession more than anything. And if people start to panic, if they start to all get smart, all of a sudden overnight, it's trouble.
Jonas, do you think this stimulus is going to, is this stimulus, you put that in quotes, is that going to avert a recession?
We've been buying ourselves out of recessions for a very long time.
It's not going to do anything.
It has problems.
You don't create wealth by taking it from the rich and giving it to the poor.
Why is cutting the payroll tax taking money from the rich? What are you talking about?
How much money do you have to
taking money from the rich to solve this problem?
Because it's not for everybody, Jonas. It's under a certain income
threshold. If you don't pay the payroll tax, that's what you and the IRS. But everybody pays the payroll tax. Well, I know.
But they're not taking
whole
it from the rich
idea
either. They're printing it. They're taking it from everybody.
Go ahead, John.
Just going to say, this whole idea of incentivizing consumption to spur the economy is ludicrous, Terry. It's not consumers. Consumers don't do anything. It's the producers.
Exactly.
We should incentivize them.
People don't produce stuff for each other. They produce stuff because consumers ultimately demand stuff.
Buy it.
No, wait a minute.
Planet, what nation are you living in, Jonathan?
Wayne, come in and break this tie.
It's not a tie. It's crazy.
No, it's not. He's right.
Go ahead, Wayne.
I think that you have to realize that in the economy there are going to be ups and downs, and the fact that you have to think that the government is going to fix it every time by either taking the top off and creating a heavy tax burden or stimulating the economy on the bottom. Listen,
so
we have lived.
Isn't necessary
If you'll forgive the expression, we have lived very high on the hog for the last 20 years.
And the problem is it wasn't even our hog.
We have done. If you look at us in comparison to the rest of the world, we have done wonderful things. We need to be satisfied with that. Our next generation or the next generation after that are going to have to satisfy themselves possibly with a different standard of living.
Absolutely. That's a wrong attitude. That's insane.
Okay. Gotta leave it there.
But if you get some tax cuts in place, it will maybe help make a bad recession not as bad.
All right. Okay. We gotta leave it there. Don't forget, though, you can catch this. Time now for best bets. Okay, Wayne, a tough market here. What are you playing?
Well, I'm playing the shorts. That's SDS. That's the short of the S&P 500. I've had that short on as a hedge in the last couple of months. I'm a little over 20%. And as I said earlier, I'm going to short Jonathan's brain along with it.
Okay, you're still bearish, Jonas?
I'm not that bearish. I'm not crazy about shorting the broad market. I would rather just cut back on my stock.
So what are you playing?
I am playing the up the down economy pick here with another short. This one's a basic materials. It's an ETF, very risky, but during a recession, these companies are going to fall much further than the regular stock market, so you can hedge your regular regular stock portfolio,
Okay.
paper companies, mining companies, etc.
Peter, he's shorting your favorite stocks.
If you want to be short, don't pick basic materials. That's not the place to be short.
So what are you
inflation, and you want to be on pure plays on the U.S. economy. I think in these difficult times, all the volatility, you want staying power, you want yield. I like Harvest Energy, HTE. It's near the lows now. It's a Canadian trust listed on the New York Stock Exchange. You get about 20% yield, pays monthly, and Canadian dollar.
But Peter,
Jonathan?
why, just out of curiosity, why is it down by a third since last summer?
Well, you know, you've had problems with natural gas prices, which had weakened, and now they're strengthening. And I think you've also had a lot of other margin call related selling from some of the hedge funds that were long on leverage.
So, Jonathan, how are you playing this market?
I like muni bonds quite a bit right now, Terry. MUB is an ETF that tracks a national muni bond index. Shouldn't be your only position, but you know, the asset class in general, I think, is a great hedge against likely higher taxes down the pipeline.
Okay, we got to leave it there. Thanks, everyone, for joining us. Have a great weekend. All the news is straight ahead right here on Fox.